So I put it to you, my motto is, this is not taught in schools. Now, no disrespect to schools and teachers, because I was a teacher back in the day. But whether I wasn't listening or I wasn't there, I don't think we learnt enough about financial literacy. Now, what I mean about financial literacy is the ability to navigate your way through life, making smart decisions around money. Yeah, we get taught literacy and numeracy, but the practical skills in life is where I suppose I spend most of my time being passionate about helping adults, and hopefully that filters through to the next generation. So that's my motto. What do you guys want to get out tonight? What do you want to learn? Valentina.
Okay. I guess I want to understand money.
Yeah?
Yeah.
Give me an example.
Okay, understand how to use it wisely.
Okay. Use wisely. Okay. We'll get an understanding of how wide and varied that might be throughout the night, but that's cool. Thank you. Trinity?
How to arrange money in certain things so you can have I don't know what it's called, but it's like a fund for different things.
Yeah. Arrange my money. Make sure it's divvied up and used wisely, I suppose, as well. Anton?
Perhaps how to make it work for you.
Yep.
I guess that you want to.
Okay. So with that you talk about passive income?
Absolutely.
Yeah? Okay, so we'll talk about that at the back end. So appreciating that we've got varying levels of knowledge in the room. So we're going to start, I suppose, on a basic level and then gradually broaden. Now, if some things go over your head, that's cool. That's the idea of learning. Take as many notes as you need to, and we'll continue to work through it. Right. So if we said, what is wealth? If you were at a barbecue and someone walked up to you and said, what is wealth? How would you describe it, do you think?
Your financial status.
Financial status, yeah. So there's financial wealth. Yeah. And what's an example of your financial status?
Guess kind of how much money you have in the bank.
Yeah.
Currently.
Most people judge their financial wealth as, how much money do I have? Yeah. How much money do I have in my pocket? How much money do I have sitting in the bank? Have I got assets? Do I own a house? Do I have shares? Do I have superannuation? What's my overall financial wealth look like? Okay. Now, when you're not working, it's very hard to have any confidence about your financial wealth. Right? Now, not sure if you're working or not at the moment, but when you're getting an income coming in, that's the first part. The second part is then doing something with that money. We can either spend it or we can put it aside for what I call future us. Yeah, because there's 4 steps to wealth, and financial wealth, Trinity, is only one of them. You've got physical wealth, you've got mental wealth, you've got spiritual wealth. You can be wealthy in so many areas, but when people talk about wealth, they're usually referring to money. Okay, so it's really important that we just focus on financial wealth here tonight, but I will cover off on what it means to have common goals and interests and values in your life. So 4 steps to wealth, financial wealth. Number 1 is earn money. Duh, John. It's not hard, is it? Of course you've got to earn money if you want to create financial wealth. There's no other way around it, or at least I haven't seen it either. It may come in the form of a Tats Lotto ticket or Keno, right? But the odds of that are extremely low, and most people usually blow it. So we've got to trade our time for money or let money work for us. Okay, step number 1. Step number 2 is add value. Now, what do I mean by add value? And I do give Minties out as prizes for good answers, or at least attempting to answer. So, what do I mean by adding value? Think about when I'm earning money, what I'm doing whilst I'm earning money. And I like to use the example of someone working at McDonald's, because that's what a lot of teenagers do when they first start working. McDonald's is our go-to, because they need so many workers, because they've got a system that's unbelievable, and 15-year-olds can run it. Smart, aren't they? What do I mean by add value? Valentina, do you work?
No.
No? Anton, you've worked before? Yes. So if you're trading your time for money, how can you add value in that workplace?
You can train yourself. You can be an asset to the team. You can, I don't know.
Yep, you're on the track. It's minty worthy, this answer. You can have a work ethic. You can show up on time, or even before, ahead of time. You can show initiative. You can be a team player. You can put your hand up for extra responsibilities. All those things add value. Do you want a minty?
Oh, I'm fine.
Take it home. All those things add value in the workplace. Now, why is that important? Why is it important to add value in your workplace?
Because if you don't, then things might not work properly. So if you're not like working as a team, things could go south.
Absolutely, very quickly. For you, more so than the team even. So I'm trading my time for money. What's my going rate at McDonald's? $12 an hour? 15? Let's call it $15 per hour. How many hours can I work in a week? What does mum or dad usually call their standard working week? How many hours? Yelled out? 40 hours, very good. So 40 hours is my standard working week. If I'm earning $15 per hour, what's that equate to? How many dollars per week? 600? Yep. 40 times 15, $600. That's the maximum amount I can earn in those 40 hours, unless I do more hours. However, if I start adding value, what can I then do?
Earn more money.
How? I'm the boss, Anton. Showing work ethic, team player, turning up early to work, outstanding initiative, right? Come into my office, Anton. I'm going to give you a pay rise. I'm going to make you manager of the store. Yeah? So Anton's gone from $15 an hour to $25 an hour. Pay rise. Same hours, same intensity of work, but more money. Who likes the idea of that? So that concept of maximizing your time for the money that you earn is critical, right? So adding value in the workplace. So as you mentioned, Trendy, if the team's not gelling together well, the whole thing falls down. But the individual who's not carrying their weight, what happens to them? When business slows down, who's the first to go? Them. Yeah. As a business owner, if you're running a business, you've got to add value to the customer, or the customer does what? See you later. Yeah. And you have to go and find a new customer to come to your business. All right. So really critical, because a lot of people, my age, your age, everyone else's age, do not add value. They expect the money to be paid to them, and they do the bare minimum at work. Yep, so add value. Save is our third key to wealth. Save money. How much should we be saving? If we use our example of 40 hours, 25 hours a week, $25 an hour, we're getting now, Anton, how much are we getting in?
25 by 30.
Yeah, what's that work out to be?
I'm bad at math.
It's about $1,000, isn't it? Yep. So we're getting $1,000 in. Now we're hit the big time. We've got 4 figures coming into our bank account each week. What should we portion off as a percentage ideally? It's not necessarily a dollar figure, it's just a percentage. That way, if you get an increase in money coming in, you can still carve off that same percentage.
25 to 50%.
Oh, I love it. That's a minty, actually. Trinity, that's all yours. Dad's taught you well, or maybe it was Mum. So some say, look, I'm going to put away a quarter to half of what comes in. What does that depend on?
Your liability.
What's going out in your life, correct? Yep, and the order in which it goes out, which I'll talk about in a moment. So the adults, we have to, because they weren't taught this stuff in schools, we have to sort of drag them by the hair and bring them in and rough them around and say, well, let's just start again with a brand new template. Let's start with 10%. And once we get 10% nailed, then we can say, right, let's increase it to 15 and 20, and maybe when we're hanging around Trinity, we're going up to 25. Yeah? But most adults in Australia, and I'd argue everywhere around the world, how much do they save as a percentage? 0. Why? Because it's too easy. Yeah, new dress, new shoes, new car, new this, new that. I get a pay rise, beauty, I'll reward myself. Continues to go out. Okay, so we need to have discipline to say, as soon as we start earning dollars, we're portioning off a percentage. And if we're living at home, I argue that can be as high as 80%. Yeah? So 20% is staying for us. 10% might go to some board, to mum or dad. The other 10% is for my own bills. Now, when I'm 15, 16, 17, still living at home, you still living at home, Anton? No, gone. When we're living at home at high school, maybe doing 10 hours a week of work, what are our running costs of our life? What do we usually have as a cost that's going out? Valentina, what do you spend money on?
Clothes.
Clothes, yeah? How often do you need them?
I don't really.
Are you still growing?
Not that much.
No. So you don't need them every week, do you? Yep. The bare necessities: a roof over my head, clothes on my back, food into my stomach, and a bit of water. Yeah. That's the basics. Okay. Then we go to that next level of discretionary spending. At my discretion, do I spend that money? What then happens discretionally? What do I spend it on, Trinity? There's something sitting on your leg.
Phone.
Yes. So the iPhone 12 is coming out, or has come out, hasn't it? Yeah, it's $1,400 and I need it. So I'm going to take that $1,400 of my hard-earned money and I'm going to reward myself with the greatest, and I'm going to go to school and say, look what I've got. And then a week later, is it new? No. People have forgotten about the fact that I bought the iPhone 12. I was the first one to get it. Yeah? What's that iPhone worth in 12 months' time? Close to zero. And how much has it cost me? $1,400. But what's the opportunity cost that's also gone missing? Instead of me saving it and maybe doing something with it, it's actually gone out of my life, never to return. All right? Bad asset, isn't it? Now, I'm not saying you don't need one, Trinity. I'm just saying, as an example, discretionary spending, we continue to upgrade our items even though we probably don't need them. But everyone else has got one, so I should have one, sort of thing. Okay? So 10% is a minimum, up to 80% if you are living at home, because the only expenses you should have, especially if you're nice to mum or dad, is maybe a small phone bill if you need one to get to work, etc. Maybe a bit of public transport if you need to get to work, etc. And maybe some spending money. Yeah, that's basically all we need, don't we? Yeah, maybe some presents to buy at Christmas time and birthdays. The rest we can put away and we can still enjoy life as much. The fourth one, what is our fourth step to wealth? What do we do with all that hard-earned savings, Anton?
We plant it, let it grow.
Yes. How are we doing that? How are we growing it?
Stocks and property.
Stocks and property. Valentina?
Investing it in things.
Yeah, very good. So, stocks, property, gold, probably not, or maybe Bitcoin, I don't know. Don't know enough about it. But we're going to invest it, aren't we? Yeah? So we're letting it work for us while we're asleep. Yeah? So we're investing our money into income producing assets. Now write that down. Investing our money into income producing assets. What are income producing assets? Give me some examples.
Stocks.
Shares, stocks, yes. Property, yes.
Bonds, ETFs.
Bonds, ETFs. Now, we're not going to go into details about what they are and how they work, but the general consensus is we're getting some income from them. If we buy a property, someone rents it off us, we're getting income coming in. Yeah? If we buy some shares or some bonds or some funds, exchange traded funds, etc., we get some dividends from that. Okay? But what else can they do for us? Making our money work for us means that, what did the share market do today? Anyone taken a glance? It rocketed because we've got a what do you call it? Vaccine for this disease out there called COVID. Yeah? So the share market went crazy, went 5 or 6% in some cases. So we bought something for $10 and next year it's worth $100, hypothetically. What did we do to get that $90 gain?
Wait.
We waited. Did we physically have to turn up to earn that money?
No.
We didn't trade any time for money, did we? That, my friends, is passive income. For majority of that money, we didn't have to turn up to earn that money, to see that value increase in our financial wealth. Okay? So, earn money, trade time for money, add some value at work, save minimum 10%, but if you're at home, up to 80%, and then go and invest. Yeah, make sense?
Yeah.
Cool. Any questions? We all good? Now, good debt, bad debt, and our spending. So, actually I might just use this. Bad and good. What is a example of bad debt?
Overspending on something.
Yeah, give me an example, Trinity.
Like if you buy something that you know is out of your price range and you'll say you'll just pay it back later.
Okay, so what have you used to buy that?
Borrowed money.
From?
Either like family members or like the bank.
Yes. Okay, so if it's the bank, it's in the form of a credit card. Bad. Evil. Yeah? If you don't pay them back on time, very, very evil. To the tune of 18 to 20% will be charged on the money that you've borrowed from the bank. Okay? So not good. Credit card, no good. Right? If I borrow it from the bank of mum and dad and I have to pay that back, they might be a little bit more lenient on me. They might not charge me 18 to 20%. Some might, I don't know. But it's better than a credit card. But why am I buying something if I haven't got the money to pay for it now? If it's not going to give me a good result. That's what we've got to ask ourselves, and that's what it comes down to, is habits. Creating good habits as soon as we start earning money. So the bank of mum and dad, we still want to try and avoid that. Personal loan. Right? That iPhone that I want, I actually didn't work the last month, so I haven't actually got any money in the bank, but I'll look really bad if I don't have it. So what I'm going to do is I'm going to go to the bank and apply for a personal loan. It's only $1,000 or $2,000 and I'll pay it back really soon, but I really need this iPhone. Yeah? Good decision or bad? Bad. It's not giving me income. It's not going up in value. It's going down in value. And the bank's charging me probably about 8 to 10% interest on my money. Okay, which means the $2,000 that I borrowed for that, what I used to buy it is worth zero in 12 months' time, and it's cost me probably another $200 to $300 in interest as well. Yeah, extremely bad decision. And that's where people start to make mistakes. I get a credit card, I borrow from mum or dad, I get a personal loan, and the cycle continues. How do I get myself out of that? If I don't change my habits, I continue to recycle that into a new credit card, right? Or a new personal loan. Because the banks will continue to lend. Why?
Keeping debt.
Because they're making lots of money from me, aren't they? Yeah. Okay? So we want to avoid that whole vicious cycle to begin with and just stay off that bad debt cycle. Okay? We want to get on the good debt cycle. So not all debt is bad. Okay? Let's talk about what would be considered good debt. Valentina.
Like putting your money into something that will give you money later on.
Cool. So this sort of example here?
Yeah.
Excellent. So what would that be? What would I lend money for from the banks that are going to allow us to do this?
Home loan.
A home loan. So to buy our own home to live in?
More of an investment probably, but depending how you want to take it.
Yep, and I'll take it both ways in a moment. Investment, home loan. Yes? A loan for shares? Yeah, we can potentially do that. It is a lot harder to get loans for this, and they won't lend us as much, but it's still possible. Okay? What else is considered good debt? Who's intending to go away to university? Valentina is? Abigail maybe? Trinity kind of? If we go away to university, does that cost money?
Yes.
Yes? And when we finish, we might have a debt. Is that good debt or bad debt?
Good.
Good? Why?
Because what you got, like, because that will help you earn money later.
Yes?
Yeah.
So it's a cost of doing business, you're calling it, Abigail.
Like an investment, yeah, kind of, because you're paying money so that you can get money. Yeah, so yeah.
Yeah, you like it? You've convinced me. Right. So I'm putting it over here. Hex, or what do they call it now? Help? Something like that. Anyway, it's a debt that you can pay back over time for you increasing your value in the workplace. Right? Now, if you go and do a 4-year degree and don't use that, then maybe it's back over here somewhere. Okay? But it's allowing us to educate ourselves to earn more dollars and trade more money for our time. Okay? So, and the interest on that is reasonably low. And would you believe it's the only debt in the world that you can take to your grave and not have to pay it back? That's pretty cool, isn't it? Yeah. Don't plan on doing that anytime soon, but that's how it's judged. Okay. So, home loan investment. What if it's our home that we live in? Because that's the great Aussie dream, isn't it? Buy our own home, live in it, feel comfortable, paint the walls, put some photos up, keep the lawn nice and trim, paint the fence. Is it good debt or bad?
Good.
It's good. Anton, tell me why you think it's good.
Even though you're paying it off yourself, it's still an asset.
Okay, so is the asset going up in value? Generally speaking,
Yes.
we would say yes, it is. Yep. What else did I say was a criteria for it being good debt? Income producing asset. Is it giving us income? Maybe if we're renting a couple of the rooms out. Yeah. Generally speaking, it's not giving us income. So it's actually more towards sitting on the fence than it is actual good debt. But the fact is, it's a better debt than having credit card debt, mum and dad debt, personal loan debt, and that vicious cycle, yeah? So it's okay debt. Can we avoid large chunks of it and gradually work our way through so we've got manageable debt in that space? Absolutely. Okay, now we won't go into tax tonight, but managing having assets such as shares and investment properties will help with your tax, whereas buying our own home to live in won't help with our tax. That's generally speaking. Okay, does that make sense in respect to good debt, bad debt?
Yeah.
Yeah? Excellent. Any questions while I'm rubbing this off? No? Pizza smells nice. Does anyone want some? Feel free to go grab some while I'm talking if you want. Don't all rush. Nathan, you can lead us off if you want. Okay. This is the most underrated piece of the money story. People come to us and say, oh, John, I want to have 8 properties, I want to have $100,000 in shares, I want to take on the world, and I want to retire by 40. Yeah? the first thing I get them to look at is, do you know what comes in and what goes out each month? Okay? First question tonight for mum and dad when you get home. Do you know, mum or dad, what comes into your bank account each month and how much goes out? And I want you to record the look on their face. It'll usually be, yeah, sure I do. Who wants to know? Or, why? You don't need to know that. Usually it's the second one, because we are not taught this, but it's a very simple concept. How do we track the money coming in to our bank account? Well, we have a statement that each month we get to see debit, credit, what's gone out, what's gone in. Now, banks, in their wisdom, have actually totaled this up for us. That's how simple it is these days. We can see a total at the bottom to say, well, I spent $4,400 and in came $2,300. Straight away I've got an answer as to what came in and what went out by looking at my statement. Now, we used to get them in the mail. Now we usually get them by email, and we can print them out or just make a note of it in a spreadsheet, do what we want to do with it. And then we do the same if we've got a credit card. We can tally up how much we spent there. But very, very easy to do, to understand what comes in and what goes out. Once we know that answer, what we earn and how much we spend, what can we then do?
In some cases, reduce on spending money.
Very good, Trinity. So we've got discretional spending. We've got non-discretional. Non-discretional is I need that to live. Yeah, I need to drink and eat, and I need a roof over my head, and I need some clothes on my back in proportion. Over here, non-discretional is I don't really need it, but it sounds good. Yeah, I'd really like that. I'm emotionally stressed or I'm sad, so I'll go and buy myself something and it makes me feel better for a moment. Okay, non-discretional spending is capped or should be capped. Discretional is wildfire, right? So I can drop that 4400, is it? Yes. And I can say, well, first of all, I need to get back to level pegging. I need to drop it so that I'm actually level and what comes in goes out. I'm not saving any, but at least I'm back level again. Yeah. Otherwise, your bank account just continually drains. The next month, what can we do?
You can save more, I guess.
Yeah, have a savings plan to say, well, if 2-3 comes in, what's our aim to save what as a minimum? What percentage? 10. Oh, Abigail, very good. She went for pizza and still knew 80. Got it. So start with a minimum 10. Now, if you're at home living under mum or dad's roof, I would argue that you can go to 50 straight away and then to 80. Okay? But for the adult, we need to start them at 10 and work their way up because they've got big people costs like electricity bills and council rates and all those sort of things. Okay. To get my picture, what goes in, what goes out, we need to understand what that is. Even at 15 when we start working, right through. Because if you can get it at 15 and 16 and 17, how well are you going to be equipped in your 20s, 30s and 40s if you maintain that percentage target? Pretty good. And that's where I see we have the most wins when I talk to people about buying investments. It's like, don't worry about our investments for the moment. Let's get this right first. And let's set our targets here to know, right, next month we're going to save 10%. That equates to $400. Right, in a month's time, have you got $400 saved up? Yes, I have. It's in a separate bank account. Now, I spoke before about saving money, non-discretional spending, and discretional spending. Right? So if that's our 10%. So what did I say discretional spending was?
Like the stuff you need to live.
Opposite.
Oh.
Non-discretional. I need to have that to live. Food, water, roof over my head, clothes on my back. Discretional spending, it's at my discretion as to whether I spend it or not. It's not a life or death scenario. Yeah? And then saving 10%. So put in order for me the way, if our money comes in at the start of the month or the fortnight, whenever we get paid, what's the order that we should portion this money out? And that's a minty prize, this one. Trinity.
Your non-discretional spending, the savings, and then the
1,
discretion.
2 and 3. Cool. Anton.
Sure. I'd say save, non, and then just basically the other way around.
1, 2 and 3.
Yes.
Yeah? Oh, controversy. Well, you're both right here. Yeah? The minty goes to Anton. Another one, even though you don't like them. All right? Why? Why do we pay our future self first? Any ideas? Why would we pay our future self first? Now, what I mean by that also is that if this is our bank account where our money's coming into, ideally we'd portion this 10% off into this new future account. And you know how banks like to give us lots of accounts, and some of them we don't charge or have any fees for. That's what we want over here, a fee-free account here that we can put our future money into and not touch it. It's a one-way street. It's not getting it back again to spend here. So why would we put that away first?
So it's out of mind.
Out of sight, out of mind. Because it's very easy if we keep it here. Oh, I really want something up here. I've got a formal that I need to go to, and I need a new dress, or I need some new shoes or whatever. I'll save that 10% next month. No, as soon as the money comes in, straight out to here. Then non-discretional, roof over my head, food. Then do what I want. Okay, and we call that splurge, or fun, or whatever word you want to use. But it's enjoyment time. We've done the hard work here. We've lived, right? We're not in hospital because we couldn't eat. And now we're having some fun with the rest of it. Okay? And I can assure you that if you just do that for the next 30 years, you will be financially secure. Trust me. Yeah? Follow that simple model. Okay? Teaching financial literacy in schools takes about 10 seconds. Do that. See you later. Yeah? Now there's obviously, it's gone. The fourth part of financial wealth, of investing wisely, is important, and that's an extra level of sophisticated thinking and research. But most Australian adults forget this first part. They miss that and just want to go and invest. Okay? Don't worry about what I'm spending. I'm having some great fun over here. But then when something happens that's out of our control, the whole thing falls down behind them. Okay? And what are some things that can happen that are out of our control? What's happened this year that's out of our control? The pandemic. Who saw that coming? Other than China. Was that controversial, no? Maybe get that out of there. No one saw that coming. How did I know if I was the air hostess that I was going to lose my job in a week's time? I was on $100,000 a year and I had 4 investment properties. I couldn't care less what I was spending because I was having a good time, because I knew my paycheck was coming in next week, and all of a sudden I've lost my job. Hang on a minute. I've got to sell my assets because I didn't have buffers up my sleeve, because I wasn't doing any of this. Yep. Really important. Really important. Some easy tips to save. Pay yourself first. We've said that. Change one habit. Stay at home. The biggest tip I have for 18, 19, 20, 21, 22, 23s, probably even 30-year-olds, if you're still allowed, is stay at home. Why? Why, Anton?
Generally, you can save a lot of money.
Generally, you save a lot more money, don't you?
Absolutely.
Yeah. Now, I had a call about 3 hours ago with a couple that have actually been living at home for the last 2 years because they've got a motivation to buy a property. They were paying $100 a week in rent between them. Now they're having to move out. Mum and Dad said enough's enough. Now they've got to pay $500 a week. So $400 a week in rent difference. All right, times that by 1 year is how much? 50 weeks, $400 a week, 20 grand. Times that by 5 years, what is it?
100 grand.
100 grand. You know how hard it is to save 100,000? Stay at home. Stay at home. Save on clothes. Cut down your grocery bill. Save on electricity, gas and water if it applies. Rein in the restaurant meals. Okay? Come to events like this where you can eat free pizza. Rein in the restaurants. Easy to say, oh, my friend's going out for coffee, or my friends want to go out for dinner, right, for the 4th time this week. Reduce your bank fees, just a little one. Save on your holidays. Find cheap ways to get fit. Okay, they're just straightforward ones that you can apply. Does that all mean I just live a boring life and have no fun? Absolutely not. Right? And the problem with all this is I'm preaching to the converted here. I can see that you've got that mindset of, well, that makes good sense to me. I want to apply some of that when I start earning more money. It's the ones that don't is the issue. So, who wants to buy their own home? Abigail does. Trinity does, eventually. Anton does.
Yeah, eventually.
Eventually, Valentina. So, let's talk about it eventually, because what I find when I do this exercise with people, that it actually can happen a lot sooner than later. Does that sound good?
Yeah.
Yeah? So, Anton, I reckon you're pretty close to buying, aren't you?
Yes.
Would you say 12 months?
12 weeks.
12 weeks, fantastic. How old are you again?
19.
We got that on video. 19 years of age, and he's about to buy his first property. Do you think he's done some things right in the last few years? Absolutely he has. I don't even know his financial situation. Unless you got an inheritance, by the way. But he hasn't. I know he hasn't. So, how did you do that?
KFC and JB Hi-Fi.
Not spending at the shops, but earning money there.
Absolutely.
Right. 2 jobs. How many years?
Since I was 13, so 20 in December, so 7 years.
7 years of KFC and JB Hi-Fi. Who thought those 2 wonderful brands would give you a house? Most people are on the other side of the counter, aren't they? Yeah, buying things off and on. Yeah, amazing. How much, if you don't mind me asking, have you managed to save in those 7 years?
Well, probably wouldn't want to say that, but enough for a property.
Enough for a property. And what's your spending, what's your price point?
A week?
Like, no, what are you looking to spend on a property?
Probably max 650.
650. Okay, so he's buying $650,000 worth of house, courtesy of KFC and JB Hi-Fi. It's good motivation, isn't it? Now, how many hours a week did you work on average? Those?
Whilst I was at school?
Yeah.
Pretty much hours, I'm not sure, but I normally do 4 or 5 days at school. Like every afternoon after school and then Saturday, Sunday.
Okay, cool. All right, not bad, is it? So some dedication and some discipline there for sure. So I want to park on that for a moment. I didn't know you were doing this either, by the way. It's not a setup. I didn't just plant him here, but it sounds good. So if he pulls this off and buys a $650,000 property in 12 weeks' time, which I'm sure he will, let's look at 20 years' time. If he holds this asset, he will be how old? 39. And that property grows by 5% a year. Is that fair? Okay. It's growing by how much per year? What's 5% of 650,000? Very good, Abigail. 32,000 a year. It's growing by $32,000 a year. Is he doing anything to turn up to trade his time for money for that 32 to improve his asset? No. So in 20 years' time, if it continues to do that, obviously we're leveraging our money and we're leveraging on the growth and inflation, all those things that we talk about. There's a good chance that it will be worth at least double. Yep. At least double. And if we look at the 650k assets in Sydney and Melbourne in the last 5-6 years, they've done that in 6 to 7 years. Okay, so it's not 20 years, it's actually happened in 7 years. So I'm being quite conservative in the 20-year example. Now, is that guaranteed to happen? No. But has it got a good chance of happening as opposed to discretionarily spending your money elsewhere and not seeing it come back again? Absolutely. Okay. So that's what can happen if we're prepared to be disciplined, to put in the work, to save the money, to get into a leveraging asset for 650,000. Okay. Now it doesn't have to be 650, and that's what I want to talk about now. Okay. So there's some big dollars being spoken about there, isn't there? So you don't have to be 30, 35, 40 to go and do this stuff. Now, Trinity, how long do you think before you can buy a property, your home to live in or as an investment? Grab some pizza, guys.
I don't know, roughly maybe 15 years.
15 years? All right. Okay, let's reverse engineer this. How much do you reckon we'll spend on a property?
Depends where.
Depends where? All right, give me a figure, Abigail. 400,000? 300,000?
Yeah, well, it just depends. Yeah, because that could be lots in one place, and that could be the most rundown place in another place. So
Yeah.
I don't know. Yeah.
Yeah. Okay. All right. Let's look at this another way. How much do you think we could save per week from us working over the next 5 years?
Well, if you're in school and you don't really need to take care of your non-discretion, then you can kind of just save almost all of it.
Yes.
Yeah.
How much do you reckon? What's realistic? $100 a week? $200 a week? Yeah? All right, let's go 200. And sometimes we've got to put a figure out there so that we can then aspire to bring it back to us, right? So if we said, okay, what sort of job will earn me $200 a week and not distract from my schoolwork, so to speak, let's go and search for that, as opposed to just going out there and getting any job. So $200 a week is $10,000 per annum. Yep. If we said 5 years and we didn't do any more work than what we were doing there, and we didn't actually even get a pay rise, even though I knew you would because you'd be adding value, you're ending up with $50,000. Okay? Now, how old are you, Trinity? 13. So that coincides with your 18th birthday. And your dad, because he's seen you working so hard and being so disciplined and managing your money so well, he might add in a few more dollars as well. Right? Just because he's a good bloke. Now, on your 18th birthday, when you're starting to earn money, more money, real full-time money, the banks will start to lend you money. Yes? So, generally speaking, they will require you to put in minimum 10%, but ideally 20% of a deposit on that asset. All right? So, let's start with something that's, say, $300,000. Is that what you were thinking, Trinity, about that?
Yeah.
Yep.
4,000-ish.
400,000? All right, let's lift it up a bit. Beauty. So, 400,000. So, 400,000 times 20% is what we need to put in to this property. What's the answer? 20% of 400,000? 20%. 10% is 40. 20% is 80k. So, first homeowners, what do they get at the moment? No stamp duty concession, so they don't have to pay stamp duty, right? And there's other concessions, but we won't worry about those. So we don't have to pay stamp duty, which is a cost that you would have to buy a property. So we're going to say, well, there's no stamp duty. We need $80,000 to buy this $400,000 asset, and the bank's going to lend us the rest. How much is the rest? 400 minus your 80?
320.
Very good. The bank's going to lend us 320,000. Now, we need to understand that we can repay that money via our full-time job because we're no longer at school now. Right, we're working full-time. We've got the ability to pay that back. We need 80,000. We've got 50, but we've gone to Dad, and Dad said he'd match it dollar for dollar. So now we've actually got 100. Yeah, because Dad's already set up and he's doing his thing and rewarding Trinity for her 18th birthday. And all of a sudden we've got 100 with 20 up our sleeve. Okay. Now, if Dad wasn't so generous, what could Trinity buy with her 80? She could still buy something worth 300. She'd only need 60k there, wouldn't she? 250 gives us 50k. She'd be able to get something for 250k. The key here is having the discipline to save the money year on year and knowing what it's potentially going to down the track and not just seeing it put away and can't get it back sort of thing and getting frustrated with that. And then the second part is we're leveraging our money into a bigger asset that's going to perform for us at the value of that asset. Okay? Versus I can go and buy $30,000 worth of gold. Yep. Don't know where I'd go and do that, but I could. I can't necessarily loan that money. So if the gold went up by, let's say the gold doubled, it'd now be worth how much?
60K.
60K. If my leveraged asset doubled, what would it be worth? 500. The leveraging of money is the key here. Okay? Understanding that you're putting some of the money in, but you're leveraging at a much higher rate. Okay? Now it's got to be at a rate that's comfortable for you, knowing your repayments on the loan that you're lending from the bank, knowing what your costs are to go in, knowing what your income and expenses are in your life. And that's where a lot of people get it wrong. They go and do all of that. It all sounds rosy, but they're not worrying about the back end of their life, which is their cash flow management. Okay? I'm not saving money. I don't know what's coming into my bank account. I definitely don't know what's going out. Yeah? Any questions with that? So, what if Trinity took it to another level? Now, what am I about to say, do you reckon? No clue. That's good. So, she's going to say, well, hang on a minute, Dad. Don't worry about it. I don't want you to lend any money to me. I'm going to do this all on my own. I put in my 50K, I buy something worth 250, but guess what? The deal is, by you not giving me any money, I'm going to stay at home. I'm going to continue to save money, but what am I doing with this property?
Renting it out.
Very good, Abigail. I am renting this property out for, let's say, $200 per week. Okay? So now we say, well, the loan on the property is $200,000. I'm renting it out for $200 a week. Depending on what the interest is that I'm lending the banks off, that's actually looking after itself. The tenant is covering the running costs of this property for me while I'm still living at home. Who likes the idea of that? Maybe not the living at home bit, but we'll get used to that, all right? So, short-term pain, long-term gain. I might only do that for a few years, but it gives me the ability to save more money to go and do what? Buy more income-producing assets. Okay? Now, can I move into that property if I want to?
Yeah.
Yes, if I buy it locally or if I move to the area which I've bought in. Okay? I own that asset. Yep. And I can let it do its thing over the next 10, 15, 20 years. But it's a very controlled, patient game of investing. Okay? Now, furthermore, let's look at what we call the property cycle. Anton knows about this, don't you, Anton? Yes. So, what did I say happened in Sydney and Melbourne in the last 5 years? It boomed. It went up in value. So let me quickly explain the property clock first and how it works. Every property market is different around the country. So 12 o'clock is boom. Everyone can read a clock. From 12 o'clock down, after a boom, is usually some sort of readjustment. It then becomes a reasonably flat market, and it may stay that flat for some time, depending on what the indicators were beforehand. We then start to see some sort of recovery where the days on market start to reduce, the vacancy rates are lower, there's more property out there that are getting snapped up quicker, etc., etc. After some recovery, we tend to see some growth, and then that growth becomes hot and it peaks out at boom stage. So by that stage, when it's hot, everyone knows the market's hot. The local cab drivers, the local business owners, anyone you talk to in the street saying, oh, property prices are out of control. I went to an auction on the weekend, there was 40 people there, and it went for way over what they were asking for it. Okay? That's a hot to boom type market. When you go to a auction or an open home and you're the only one there, and it's sitting around for months on end, where would it be on the cycle?
Flat.
Probably around here somewhere, yeah? Or even potentially readjusting. It's on a little bit of a downward spiral, because property doesn't just always go up. It ebbs and flows, similar to the share market, but not quite as drastic. So, as an investor, where do we want to buy on this clock?
Flat.
Flat? Would you want to buy there? Trinity, where would you buy?
Probably between like recovery and flat.
Okay, so we're saying sort of here somewhere. Valentina, Abigail?
At the just after 6, like when the growth has just started.
Yeah?
Yeah.
Right, cool. Valentina?
Yeah, same with Abigail.
Same? I've got 2 there. All right. There's a lot of property experts out there, aren't there? Everyone loves property. You go to a barbecue, people talk about property, shouldn't buy there, shouldn't do this, should do this, etc. So, generally speaking, we look back on the property market and we can understand where it's come from, but it's very hard to predict where it's going. And someone that thinks they get it right every time is telling you a bit of a porky. So, we know that if there has been some sort of growth phase that's produced an overheated market, that it's not going to last forever. It's going to come off and start to flatten out a little bit. Will a $700,000 property go to $300,000? No, but there might be a 5% adjustment depending on how high it went to begin with. But it's fair to say that if we're buying here to here, that we're going to be in a better position than most that buy up here. Because this period here could be 3 to 5 years. Okay? Whereas this could be as little as 12 months before it starts to see some growth again. Okay? Now, someone that's actually a little bit risk adverse and would like to see some movement first might actually buy here because they've already seen some growth and the days on market have already started to reduce, the vacancy rates have come down, etc. Okay? So it really depends on your personality a little bit, but understanding what the market's done previously to then get an indicator as to where it might be heading. Does that make sense? But the key here is that this is usually about a 3 to 5 year period. Okay? Now if something out of the ordinary happens, now that may change it, but generally speaking over time, that's what it's been. So let's look at Trinity's $250,000 purchase. Imagine that she had the knowledge and research to say, well, you know what? I actually think I might buy here at $250,000 because this is what the market's done, and maybe I'm going to get some good results sooner rather than later. Yeah? So she buys here, someone else buys here. What's the difference?
They're just going to go down rather than go up.
There's a bit of time before it starts to show any real growth, right? So there, we're just giving ourselves a better chance, okay? Does that make sense? Okay. So if we can save money, if we can have a battle plan, if we can have some goals and aspirations and some time frames put on it, and then we start to leverage our money, and then we buy the property in a reasonable time on the cycle, and then we rent it out at 18, it's not a bad start, isn't it? Okay. But even if you think, no, this is all too over my head, it all sounds too risky, the worst you can do is save money. Okay? Understand what's coming in, work out what's going out, and save your minimum amount. Yeah? Any questions? Anton?
Not yet.
Not yet? Okay, cool. All right. So, I mentioned then about goals and aspirations. And I usually do this at the start, but I wanted to touch upon it now, later, because we've had maybe a bit of momentum building through what we think is possible. When we're 5, 6, 7 years of age, what do we have? What do we...
Dreams.
Very good, Anton. We have dreams. It's like, oh, I want to be an astronaut, I want to be a firefighter, I want to be a rock star, something, whatever it may be. Okay? When do those dreams start to fade away and think, oh, no, it's not realistic now, they're not cool anymore? When does that happen? Age 10?
Teenage.
Oh, teenage. Sorry, I thought you said 10. So teenage years. So what happens at teenage years?
Start to mature and see things from a different perspective.
Yeah. Why?
Because you're growing up and you're starting to understand a lot more.
Yeah. And would you say that your peers influence the way you act and do things? Yeah. Good, bad, or otherwise. So that's where your dreams no longer cool. Goals, nah, not for me. Just want to enjoy life. Yeah. So we've got to tell ourselves a different story. Who plays sport here? Abigail? Netball.
Yeah.
Right. Do we set goals when we play sport? Does a coach set our goal for us, or do we set a team goal? Or do we want an individual outcome as a result of playing sport?
Well, some of the goals I have is mainly just to improve yourself, not to do like the team outcome, kind of just like maybe improve on like my agility, strength, those are goals.
Cool.
Yeah.
So you've got goals relating to your sport that are specific. I want to improve my agility, I want to improve my strength, etc. Okay. What if we applied goals and habits to every area of our life and not just the one thing that we were passionate about over here that was sport? Okay. Valentina, what's your passion, would you say?
Like exercising, fitness.
Yeah, cool. So do you wake up January 1 and say, gee, I'm going to nail this year, I've got my New Year's resolution, I'm going to run 10K, or do you have goals in relation to that?
Kind of.
Yeah? Okay. So, over there on the tables are pizza, right? We've got 4 slices to the pizza. As an action step, I want you to nominate the top 4 areas of your life. What do you enjoy doing most? Okay? Or what do you appreciate the most? Or what are your highest values within your life? Okay? Now, I'm going to give my 4. So, in no particular order, my family. Yeah, wife, 3 kids. My sport, which is Ironman Triathlon. My business is pretty important because that's what I'm passionate about, which is my vocation and what I do every day. And then my fourth one is my friends. Okay? Where's money?
3 o'clock. Oh, number 3, sorry.
Yeah, it's not a clock now. Clock's over here, pizza's here. Clock, pizza. Money's there, okay? Is it a value? Is it my highest priority?
Not necessarily.
No. Is it a byproduct of doing this well because I'm passionate about that?
Yep.
100% it is. Yep. If I cross that out and put money, how does that change?
I feel like I can't really be passionate about just having money. Like more about, I don't know.
Yeah, I know where you're going.
Yeah.
Money is all coming in, isn't it? It's all about me. Yep. Business is, or for me, what am I doing? Helping others. Okay? Pushing it out to then receive back. What's the difference? I'm giving value out in return for money. Yeah? So that's a passion. Money will look after itself. Okay? My passion, my interest are hanging around my friends. I get enjoyment. My family, most of the time, give me enjoyment. Yeah? Sport keeps me healthy. Enjoyment, passion, all these things. What's the underlying message here? Passion and interest. Okay? So it's not, it's like going back to being a 5-year-old again and saying my dreams and my dreams are, I want to be an astronaut. Okay? We're saying, well, what are my passions and my interests? Because if I'm not living those, then what am I doing? Okay? If my passion was my iPhone, my clothes, my friends, and my Instagram account, okay? What's happening there? It's all about myself only, and it's all take, no give. Okay? So understanding that in all of this, we've got to be living our passion. So when we're heading off to potentially study, or we're heading off to trade our time for money, or we're heading off to run our own business, the number one indicator, I believe, for success, or what you define as success, is being passionate about something. Okay? You've just got to find what that is and list them. And then you can create a life out of that. Okay? Then what you're doing there is saying, well, what are my habits? Okay? So Abigail's goal is to improve her agility. What are her habits going to be on a weekly basis? Eating pizza? No, that won't improve agility.
Like training.
Okay, I've got to schedule my training. That's one habit. Number 2, I've got to get my sleep so I can train well. Number 3, I set out what I'm actually going to do in that session, or a coach comes in and tells me what to do.
Yeah.
Okay, so they're my habits. What will happen if I do those habits all the time for the next 12 months?
Improvement.
Goals achieved naturally, isn't it? Yeah. Same with money. Same with agility. Same with running. Same with anything that you're passionate about or set a goal for. You're setting it for you, and it may be helping others, but you've got to have some habits around it. I firmly believe the habits are more important than the goals themselves. If you're doing the habits, the goals will look after themselves. All right. Bit of a boring one, this one, but I love it, so I'm going to tell you anyway. How many hours in the week? Over 100?
Yep.
Less than 170? I'll put you out of your misery. 168. So, what am I doing with my 168? Your next step, after you've asked mum and dad how much is coming in and how much is going out, is what am I doing with my 168 hours? Yeah? I might need 8 hours sleep. Probably shouldn't need too much more than that-ish. So that's about a third of it, give or take. Then I might be going to school. I might be assigning some time for study. I might be doing some work. I might be living my interests like my exercise or my reading books or hanging out with friends. What am I doing with my 168 is the first exercise, because once I can then see what I'm doing, I can then look at it and say, well, hang on a minute, 140 of those I use really well. There's 28 of them that I just can't find what I do. I don't know what I do. So tracking that to become a more efficient operator. So when Anton was going to school and working 2 jobs, do you think he needed to understand what his schedule looked like?
Yep.
Absolutely he did. And he needed to include some downtime. He needed to include that he had enough sleep to be able to work well and get the best out of everything that he was doing. Right? So the 168, when you do this exercise, it also needs to include nothing time. So it's okay to do nothing. It's okay to sit on the couch and veg for an hour at a time. Just don't do it 10 hours a day, every day. That probably won't help, will it? Right? So putting that into that schedule, but being aware of what you're doing with your time, so you're becoming a more efficient operator. Okay? Why is it important to the outcome? Why would I want you to go and work out what you're doing with your time? Time management for?
So you can figure out where you have time to put in certain things.
Yep.
Work towards your goals.
Very good. So when I'm not spending enough time with family, or my business isn't working, or I'm not training enough, or my friends are missing out, okay, it's because I'm vegging out doing nothing. Okay? So I've got to get back on track and work out that, hang on, for me to enjoy what I'm doing most days of my life, these are the 4 things that makes me enjoy my life. If I'm not scheduling and maximizing that, one of those areas is going to fall down, if not 2 or 3. Okay? Now, if I'm working all the time and never seeing my family, out of 10, this might be a 10. Their business is running really well. But what's my family out of 10? In terms of spending time with them and engaging.
0.
Yeah, it's up here to 0. Okay, friends, also a 0. Sport, yeah, haven't got time. It's probably a 5, bit of an outlet, right? So if I join the dots, it looks pretty ordinary. I've got a 10 in one area and a 0 in the others. Okay, so I want a little bit of balance in that respect. Okay, that's why it's important. Going to finish off with investing, talking more about passive income. So, is there anything that someone wants to get answers to in relation to investing or passive income? Anton, what do you got for me?
Probably a little beyond this, but tax benefits and bits and pieces, but...
Yeah, okay. So let's start with mindset. dollars, as in lending, and then the Y. So, two things stop people from investing. One is money, the other is mindset. Yep. Is this one here, I can't save any money, I haven't got a deposit, I'll never have one, I'm not buying. Okay? Or I can't lend money because the banks don't see my income as high enough. Yeah? Which is 16-year-olds, 17-year-olds, or someone that's not working enough hours when they're adults. Okay? So that one is a roadblock. What's this one? Mindset. What's that all about?
Kind of like positive, or like, or just like you stuck in that, yeah?
Yeah?
How you look at it and where you are.
Yeah? So I can or I can't, either way?
Yeah.
Yeah? So would you say that investing is risky? There's a risk associated to it.
Yep.
Yep. Is there a risk in buying your own home to live in?
Yeah.
Yeah? I've still got to pay the money back to the bank, don't I? Okay. So there's a risk that comes to investing. So to have that investing mindset, I need to be able to understand the risk, and then I need to be okay with that risk. And if I'm not okay with that risk, what happens? It stops me from doing it, or I do it and it keeps me awake at night. Either way, they're not good options, are they? I don't want to be kept awake at night, and I don't want to do anything either. So I need to overcome that by educating myself and researching and surrounding myself with positive people that have done it before. So positive mindset, positive team of people, educate myself, or at least understand why I'm doing it. Okay? Having the ability to then lend money gives me the magic formula to then take action as an investor, but understanding what I want from it. Why would I go and do it? Okay? Anton, if I said to you, why do you want to go and buy some stocks and a property?
Financial and lifestyle freedom.
Okay, and what does financial and lifestyle freedom mean to you?
Being able to wake up, do whatever you like. If it's you choose to work, you can go to work. If you want to go and travel the world, you can do that while your passive income's coming in, to sustain the life that you want to hold, I guess.
Okay, great. And have you got a time frame on that?
Not explicitly, but I'd say 15, 20 years.
Okay, cool. So we've got a goal. We've got some habits that we're working on at the moment to achieve that goal in 15, 20 years' time. And then why is, well, I want to have flexibility of time and choices. Okay? So if we didn't have that why, would we bother doing it? No. So as investors, we've got to have a why. We've got to have a passion inside us that says, this is what I want in 10, 15, 20, 30 years' time. Now these are my habits that I need to go and work on in order to get that happening in that desired time frame. Yeah? The benefits along the way are what you mentioned before. I'm paying tax in the tax system at the moment, working in Australia. And as a result of buying income producing assets like running a business, having investment properties, having shares, I'm able to claim the running expenses of those assets, which claims back against my taxable income. So if I'm earning $50,000, and I won't go in too deep, I just want to give a broad example. 50K coming in as income, I might have spent, let's say $10,000 as expenses on that particular property. Okay. Now the property might have given me 8K of income. Yep. So I can claim the 10K of expenses back against my tax rate. Right. Now if I'm earning 50K income, I might be on, 30 cents in the dollar that I'm 30% tax rate, give or take, 32 or whatever it is. Right. So I can now claim that 10K at 30 cents in the dollar. So I'm getting 3K of that back out of that 10. I don't get the whole 10 back, but I get potentially 3K of that back, which gives you total income of what on that particular property? 11. The 3 that I get back plus the 8 I've already got from rent, I'm now in front. Yeah? Is that what you meant by tax benefits and how that works? Does that make sense? Cool. So that's obviously, you talk to your accountant about how you can best structure that based on how many assets you've got and how much income you're earning at that particular time. Okay. All right. So in rounding off, take a moment now to think, what have I learnt? What are the key things that I've taken away, whether I've written them down or they're in here? We need to think about what we've learnt. We need to then think about, well, what do I need to change? All right? Because even I need to continue to change things and review and reflect on that. All right? So what do I need to change in my life at the minute? Is it, well, actually, I'm not earning any money, so can I start by earning some money? Right? Is it my expenses over here? Can I cut back on some of those that I probably don't need? Is it setting up an extra bank account that allows my savings for my future me to go into that account? Is it reading more stuff? Is it talking to mum and dad more about our cash flow management? Right? Is it understanding how much income's coming in? They're the things that we may need to look at and potentially add into our kit bag or change at some stage, which incorporate our next steps. Okay, so what's our action step number 1? What did I say, Abigail?
Understand our cash flow, like how much is coming in, how much is going out.
Yes, and who are we targeting that at tonight?
Parents.
Our parents. Don't give them my phone number, will you? Right? I don't want them all ringing me tomorrow saying, "Oh, what have you done to my kid?" Brainwash them. So what's coming in, what's going out? General conversation. Right? We want to put money as a conversation point back on the dinner table. And we're sitting around having a good feed together. Let's talk about the concepts of it, right? The basic concepts that are going to set you up for when you turn into trading time for money. Yeah. All right. I don't know why that bottom one's there. For those that don't already follow, website, 2 websites actually, YouTube channel with a whole range of videos on it that are a good starting point for education. The knowledge of taking that stuff in and repeatedly listening to it until it becomes ingrained knowledge and I can have a good conversation about it. Right? We do run a podcast, co-host with another guy, you might have heard of him, Glenn James, and we talk about money. So it's pretty basic concepts. We do go into detail occasionally, but a lot of what I talk about and we talk about is not rocket science. It's not complicated. It's pretty basic stuff. Would you agree that a lot of what we spoke about here tonight was easy to understand? Yeah? And do you think you could go tomorrow to school and talk to your friends about if you had to. Some of those concepts. Yeah? So you've learnt that in 90 minutes. Now some of you already had some pretty good knowledge. I'm actually quite impressed, which is awesome. But you've made the effort to come here, which also tells me that you're prepared to take some sort of action and learn. Okay. All right. Any questions before we finish up and eat some more pizza? Anton, any?
No, thank you.
No? Okay. So what's your next step? Pre-approval?
Yes.
And then strategy, locations, yields, all those sort of things? You're going to live in it, first homeowner? Tossing that up. Yeah?
Yeah.
Okay. Cool. Valentina, what did you take from it? What was the most important thing you took from it, do you think?
Pretty much all of it. All of it was really interesting, so thank you very much.
No worries. My pleasure.
I have one question.
Sure.
So at my age, is there any way I could invest in anything or not really?
You can't get loans as such. You can't go to the bank and say, give me $1,000. But you can use some cash that you have saved up and go and invest in stuff. Like, now when I say stuff, like managed funds or exchange traded funds or even shares. But in most of those cases, you would need mum or dad to have that account, and you would give them the money and they would go and invest it on your behalf. Yeah? Which is a cool way to go about it. Because at the moment, if you just put your money into the bank and into a term deposit and left it there for 6 months, you're better off leaving it under the pillow. Yeah, it's not giving you much of a return at all, because money is pretty cheap at the moment to lend. Okay? Is that your sister? She might want some pizza. Trinity?
Probably how to save for when I do look at getting a job, like
Yep.
next year.
Cool.
What I should be doing with money.
Very good. What do you reckon? JB Hi-Fi, KFC, McDonald's? Not sure?
I preferably wouldn't want to go into like Macca's or anything,
Mm-hmm.
but yeah,
Maybe you could work for Dad. Yeah?
we'd love that.
Yeah. Well, one thing I will say to finish is if you put something out to the universe, a lot of the time it rewards you. So if you start to think about this more and more, and if you start to talk to people about it, something will pop up. Yeah. I don't know how that happens or why, but it does. Yeah. But the first step of you coming in and wanting to educate is by far the most important stuff. Yeah. So well done. Any final questions? No? All right. Well, feel free to hang around. Take your goodies bag, grab some pizza, and thank you all for attending.